The volatility, which started after the FOMC announcement back on December 18th, appears to be continuing today, with the S&P 500 down 1.1%, nearly 100 points from the peak of the market open, right at the 6,000 level, closing just above 5,900. This volatility is basically carried over into 2025, and we're basically trapped in between these levels that we've been discussing now for the past month, the 6,000 level to the upside and the 5,850 level to the downside. If you've been watching our YouTube videos over the last several weeks, we keep highlighting the 6,000 and 5,850 levels. These are our key support and resistance levels, and we just have not been able to sustain a move above or below this zone. Obviously, on the lower end here, our dealer cluster zone is a key support area. This is an area we've identified where market participants are likely closing out their put positions, forcing dealers to cover their short futures positions on the S&P in order to hedge their portfolios. And that's part of the reason why we've been seeing these significant bounces from this lower dealer cluster zone. If we just scroll down here to our historical GEX chart, you can see this equates to our lower dealer cluster zone, is essentially where we've been negative 1 billion gamma exposure. And so that's a fairly extreme reading on the negative side. And a lot of times what happens is we get these extreme readings, and this is where market participants are covering their puts, and that's what causes the chain reaction of option dealers having to cover their short futures positions, leading to a significant bounce or boost in the market from that point. And so it just kind of adds some fuel to the fire when that process takes place. And so the last couple of times we've been down here, we saw significant bounces. We're back down here again as of the market close today. And so we're going to be watching to see if this same process unravels this time around as well, and maybe we get a bounce higher. Remains to be seen. We'll have to check what the gamma exposure data looks like after the open tomorrow. And I will note that we saw the highest volume today at the 6,000 strike on the S&P 500, and notable volume at the 60/50 strike as well. Nearly 100,000 contracts traded at that level as well. Next, let's take a look at a few key stocks. We mentioned Nvidia yesterday, which breached the 150 strike. If you recall from yesterday's video, our upper dealer cluster zone was in the 150 to 155 range. And we noted that dealer selling pressure was a key factor to the rejection that we saw midday yesterday. Obviously, Nvidia got racked today, down 5.45%, trading at 141.29 here in after hours, all the way back down basically to right above the 140 strike. So we've had a little bit of a shifting in the gamma exposure data. The dealer cluster has now moved down to the 140 strike. This is classic gamma exposure behavior, where dealer selling pressure at the upper dealer cluster zone. But of course, there's other market dynamics at play. So a lot of volume continues to come in at the 150 strike and the 155 strike. Despite the volatility, Nvidia is still on a decent path forward, and we think a bounce here at the 140 strike is likely. Next, let's take a look at Palantir. Palantir, in my opinion, holding up reasonably well, just under the 70 level. Of course, getting hit hard, down 8% today. But as you can see, over the past month, it's been trading between the 70 and 80 strike here. This has been our upper and lower dealer cluster zone for the last 5 or 6 weeks. We got multiple tags of this 80 strike, which was really nice. We actually took a trade on this in our community Discord, link down in the description below if you're interested in checking that out. But you can see even today, the volume coming in at the 80 strike and the 70 strike is still intense. Nearly 80,000 contracts traded at the 80 strike, even though we were trading nowhere near that level in today's trading action. So we talk a lot about gamma exposure, we talk a lot about portfolio strategy, and these two things combined give us a high probability approach to our trading method. This is part of the reason why we highlight these dealer cluster zones, because these are high probability zones of either acting as a magnet or serving as support and resistance. And this action in Palantir over the last month is a great example of how this works. And so Palantir is a name that we're going to have on our watch list, potentially for taking a position around this 70 strike. What we'll aim to do is take an asymmetric risk reward reward approach, meaning a fairly low risk. So if there is a breakdown, we don't lose too much money. However, if there is a large bounce from this point in another attempt back up to the 80 strike, we'll have outsized returns. And that's part of our probability assessment as we're adding strategies to our portfolio. Let's take a look at another good example on Google. This is a name that we're actively trading in our community Discord. Google got hit today, of course, but not as bad as everything else, only down 1.15%, just below the 195 strike. You could see we had large gamma exposure at the 200 strike. We have large volume coming in also at the 200 strike. And both of these levels have been here for the last 3 or 4 weeks. We actually got the first tag right before that FOMC announcement. I think it was on December 17th. We got another tag this morning of that 200 strike. So this is a great example of why these gamma exposure levels are so key. You can get multiple tags as long as the gamma exposure remains at that level. Ultimately, we did get a rejection. Again, classic gamma exposure behavior as dealers are selling shares of the underlying security in order to hedge their options positions. So this is another great example of where we would be looking for a high probability risk reward setup. Any further decline below the 195 level, anywhere between 190 and 195, you can see we've been in this zone many times over the last month and had multiple bounces out of this zone back up either to the 195 or the 200 strike. So we would be looking for a similar setup. If we get anywhere in here, we'd be looking to take a low risk play, meaning if there is a breakdown and our thesis is wrong, we'll take a small hit in our portfolio. However, if our thesis is right and we get an additional tag of this 200 strike, we will make outsized returns, maybe 3, 4, 5x, depending on the type of strategy we employ. So this is just another great visual example of how we use gamma exposure and then how we search for high probability setups based on the data. Another thing that caught my attention today is how much volume was coming in at the 205 strike. 60,000 contracts here on Google at the 205 strike. Google never even traded near 205 today. So that is market participants taking advantage of this opportunity on this down move today, either selling calls at the 205 strike to try to collect some premium, or speculators coming in at the 205 strike expecting a bounce later in January. Both of those combine to act as a magnet when it comes to gamma exposure. And so that continued volume coming in at these levels will eventually start adding to the gamma exposure levels. And then eventually these levels, as they grow, become larger and larger magnets for price over time. So if you guys are interested in learning more about how we use these high probability strategies and our gamma exposure data, we are running a promo $300 off our yearly Portfolio Manager tier subscription. This is our holiday promo that we've been running for the last couple of weeks. We've got one more day that we're running this. Use code HOLIDAYS at checkout. Take advantage of that while you can. You'll also get access to our community Discord. We've got a ton of great traders in there sharing their strategies and some great information every single trading session. You don't want to miss that. I'll put a link down in the description below so you guys can check that out for free. Thanks so much everybody for watching, and we'll see you guys in the next video.